Hi, and welcome. Today we're going to be talking about how to track and control your money. My name is Anita Arihome, and I'm the financial literacy coach for St. Philip's College. So if you have any questions about today's presentation or are needing assistance in how to start a spending plan or needing assistance on how to open up a bank account and knowing what type of bank account is best for you, please don't hesitate to reach out to me. My email is erehome@alamo.edu, or you can contact me at 210-486-2140. So this material is not intended to constitute any tax, investment, or legal advice. If you need investment, legal, tax advice, and/or credit counseling, please consult with a professional within those areas. So these are topics around budgeting and planning in general. But today we're going to be talking about how to control your money by utilizing a spending plan, and then also some of the common mistakes that we as individuals do when we create a spending plan. What mistakes do we run into, right? So obviously how to track your money, how to decide if you really need to spend money on something, meeting financial goals, and developing healthy financial habits. Because at the end of the day, that's what we need. We need to establish financial healthy habits to move forward in our day-to-day spending. Right, so spending plans, here we go. A spending plan. So some people might use the term budget. So you can do spending plan, right? Because they look at it as I get to spend money. The positive aspect, right? I'm spending the money that I'm making, that I'm working hard for. And a lot of people use the term budget, right? So sometimes they want to restrict that, right? So it's like a negative aspect, a negative word in some people's minds, which is okay. But whether a spending plan or the term budget, this helps you keep track of how you're spending your money, right? So that's really, really important. So keeping your spending on track can help you reach life goals. So if you haven't set life goals or financial goals, that's something that you want to start doing, right? What do you want to get or gain out of your finances? So one thing, if you haven't done it, is you're going to go to iGrad. It's spc.igrad.com. You're going to log in. It's free to you as a student. There is a financial health assessment. So iGrad is specifically designed and customizable to your financial needs. So what you're wanting to get out of your life goals and your financial goals. And so that's a great way to start, right? Is how to set financial goals is to get to iGrad, take the financial health assessment, find out what type of financial goals you're trying to accomplish, okay? So whether it's going on a trip or buying a house, it helps you match your income and your expenses so that you don't end up spending more money than what you have to. Sometimes, you end up spending on, unnecessary things, on your wants, right, versus your needs. So a great example is, if you're not budgeting or creating a spending plan and you're having to use now a credit card to pay for groceries, because you're already out of money because you didn't spend or budget correctly. Another good reason to avoid expensive mistakes or financial mistakes is, you want to avoid those things, right? So not keeping track of your money can lead to overdrawn accounts, which means you're going to have to spend more money. More money's coming out of your account, out of your pocket, because you're not keeping track of what you're spending. So now you have all these overdraft fees. Most fees can be anywhere between $25 to $50, depending on your banking institution. But then also, when you get to that, like, what if your cards decline? Like, what happens then? Stores not be able to take your checks if you've written hot checks to them before. So it's very important that we keep track of a spending plan. So you're probably like, okay, Anita, what's a spending plan? So a spending plan keeps you on track when you reach keeps you on track on when you're wanting to reach your life goals, whether that's, again, going on a trip or anything like that, right? So we want to make sure that you make a list of your expected income. So what income is coming in? So if I'm working here at Alamo Colleges, and let's say that my total monthly income is $2,000, right? So that's all of my income coming in. I don't have a side gig, I don't have anything else. It's $2,000, right? And then I'm going to make a list of my expected expenses. So my rent, my grocery bill, my electricity, my water, my kid's school, her gymnastics, all of those things, right? And I'm going to compare the two, right? This is again, using iGrad, because they have an interactive budget tool inside at iGrad that's built in. All you do is go to the search menu and type in budget, and it's an interactive tool, right? And so then we're able to see if I'm positive or negative with all my expenses, if I know that I have $2,000 coming in and I actually have, let's say $2,500 going out, I'm negative already $500. What do I need to do to scale back to ensure that I'm at that, 2,000, or that I have a positive number? Either I need to apply for another job, making more money to increase my income coming in, or I need to decrease my expenses, right? So if your expenses exceed your income, it's now time to take a look at the spending. What are my spending habits? Are they needs or are they wants, right? So some of the common mistakes is probably forgetting to save. That's everybody, right? So you throw your spending off course by forgetting to save. So it's a good idea to pay yourself first. They always say pay yourself 10%. Now, when we say pay yourself, it's not, I'm going to take that 10%, I'm going to go buy something. No, it's actually putting that money in savings for unexpected expenses. I've done a couple of classroom presentations. Over the summer, I had to do a root canal. I had money in savings, but I wasn't expecting my dental insurance not to be as great as I thought it was. And so my root canal was almost $1,000. And I was like, wow, like there goes a little bit more than half of my savings. Like that just now, yes, it was good that, I have that money saved, but I also wasn't expecting that. So I'm like, okay, now I have to rebuild my savings, right? So another common error is forgetting to allow wiggle room. So if you budget yourself $20 a week for gas and gas prices go up, which they have been lately, you want to make sure that you're, giving yourself that wiggle room for unexpected expenses, especially, for the flexibility of gases going up and things like that. And then not keeping track of your expenses can really throw off your budgeting, guys, especially for those small expenses that we never really keep track of because we're like, oh, it's only $3 or it's only $5, but over time that adds up. So be sure to account for all of the money you spend, whether it's fast food, a birthday gift, for your best friend, or a book. Spending online can be especially challenging to track because generally, like, it's easy for us just to be like, okay, I'm going to purchase this, and oh, they already have my credit card information. Let's click, confirm or purchase or buy, things like that. So keep all of that in mind, in the aspects of include every small expense. Keep track of that so we can then budget for it next time, right? Because the only thing that we have to do is we learn from our mistakes, right? Trial and error. So obviously it didn't happen this month. What do I need to do the following month to ensure that I stay within my spending plan, right? And that I'm saving, and that I'm being flexible, and I'm keeping track of all the small expenses. So the next step is to create a cash flow statement. And you're like, a cash flow statement? Now I'm having to do a spending plan or a budget. It's a cash flow statement. So a cash flow statement basically is when you put all your money together, right, with your spending plan, which tracks on how you spend your money. So some banking institutions, which is great, already kind of keeps a cash flow statement for you in the aspects of, okay, Nida, like this much is going to entertainment or eating out. This much is going to, education. This much is going to, gas. Some of your banking institutions probably already categorize that for you. Some of them also allow you to make your own category, so you can kind of create your own cash flow statement to be like, where is my money going? And if a lot of it is going into like entertainment or eating out or things like that, then you're able to visually see, this is where my money is going. Okay, what do I need to do to cut back, right? So it's important that you always want the bills that you've included into your spending plan to be paid first. Very important, right? Because it's a domino effect. If you are using all of this money on your wants and not your needs, it's this domino effect. Okay, I didn't pay my electricity bill. Now I have a late fee. And then it's like, okay, but it was only $2, so I'm going to pay it late again next month. And then it's like you're on this pattern of paying late. Okay, but what if it was a credit card? Your $25 minimum payment that you didn't make is now late. Now they're charging you with the $50 late fee or a $25 late fee. Okay, so now instead of your $25 payment, let's say it's $25 late fee, now you're making a $50 payment, right? And still, there's still interest that you're paying towards plus the late fee. So who's really not getting the benefit of paying their bills on time? It's you, because now your credit score is going down. It's starting to trickle down because you're paying things late. So it's very important that we pay those bills on time, you guys. So the next one, so this is kind of an estimate on the cash flow, or an idea. So one way to do this is to divide the cash flow statement into 2 pay periods. So here, right, we see payday the 1st and payday the 15th, right? That's how I get paid. So listing income and expenses for each time frame, and then determine which bills get paid with each paycheck. So for example, I get payday on the 1st and payday on the 15th. So I have my rent and I have my utilities. So everything that's in between the 1st and the 14th gets paid with the first paycheck. And then anything from the 15th through the 31st gets paid with the next paycheck. So then I know everything on the 1st and the 15th is going to get paid no matter what. Even though the bill's not due till the 23rd, like on this instance, the car payment's due on the 23rd, I'm still going to pay it on the 15th, because once I pay it on the 15th, it's already done. I'm not going to be worrying about, okay, when is it due? Do I have, oh my gosh, I was busy doing this and I didn't get to pay it. Now it's late. So you guys, this is how this works, right? It's very important that you pay those bills first, those expensive bills and the bills that are going to impact your credit report positively or negatively. So if you're including the financial aid refund in your income, think ahead of when you're going to get your next financial aid. Figure out how much you'll take from your refund each month to cover your expenses. Most creditors will work with you to set up due dates that work for your pay schedule. So for instance, I had a bill that was due the 14th, and I had already had like everything scheduled. I'm like, okay, can we just move this to the 15th? And they're like, oh yes, Miss Rehome, like no worries, 15th, because I was like, okay, now I'm taking this amount and I'm moving it to the next paycheck. So then that frees up more money for me from the first paycheck, right? So again, talk to your creditors. They're there to help you. They're there to help you be successful. All they want to make sure is that you're paying that bill on time. So what will work for you? Okay, so how to actually make this happen? How do we set this, into motion? There's lots of online banking and budgeting apps and personal finance software options that can help you track what you spend in different types of purchases. But keep in mind, these methods won't actually show or automatically show pending checks or debits that you've already done. So this will give you a false sense of security in the aspects of, oh, well, I already took out, I already charged $100, but it's still showing $700 in my checking account. And then automatically assuming, oh, I still have the $700 because I'm thinking that $100 already came out. That's not always the case, you guys. So it's very important that you try to find an app that works best for you. Another option is using pencil and paper, which is a form of a check registry. So, right, if you have a bank account and you write checks, then definitely write all that information down. Check 189 was paid to rent for $1,000, right? Write it down. Another thing is like low tech. Another low tech way to track and control your spending is the envelope system, right? So what they do is they place the amount of cash in the envelope equal to what they plan to spend for specific categories. So if there's like clothing and eating, dining, gas, if I'm giving myself $100 for gas for the month, once that $100 is gone for the month, it's gone. Like you don't need to pull from another place, right? Especially if you're already almost limited out in your other envelopes, right? So each envelope needs to be labeled with a certain category. Again, setting up that cash flow. And if your bank tracks that, it gives you a great opportunity to be like, okay, my bank tracks it as this, right? So write it down as this. I allot myself about $100 a month for clothing to buy me stuff. I only buy stuff on sale, but you never know, whatever works best for you. Another great thing to do is, along with the envelope system and following the cash flow of what your banking account does, then you're able to see, okay, well, I allotted, right, because my banking account says that I spend $200 in entertainment. Well, I'm going to only put $100 in entertainment this time and kind of leave $100 floating around just in case I am negative somewhere in a different envelope that I can pull from that, right? So it's a good sign to adjust your budget if you are negative in any of your envelopes, and definitely what do you need to do to start cutting back. You can, again, put more money into the empty envelope category for the next month, or budget less depending on what money's left over. But whatever money's left over, definitely put that into savings, right? So it's very important that you do that. So now that you learned why a spending plan is important, how to create one, keep in mind these steps of getting started on the path to financial wellness. Set goals, whether short-term, long-term, or even medium range goals. It's very important to set financial goals. Again, getting onto iGrad and doing that because they're going to ask you specific questions about your financial situation. Are you a current student? Do you have student loans? Are you fixing to graduate? Do you currently have a job? Do you contribute to your 401k? Do you plan on purchasing a home? Do you have children? Are you planning to save for your child's education? All of those things, right? Those are things that I never really considered, but now I do, because I'm like, okay, I have children. I do want to purchase a home. I do want to do these things. So then iGrad, again, customizes iGrad platform to my specific financial goals. So set goals, develop a plan for meeting those goals, track your spending, especially when it comes to wanting to save money, whether it's for a trip, whether it's for unexpected expenses. It's important to track your money to find out where you're spending it and how much money you can actually save and put into savings and put into an emergency savings for those unexpected, expenses. And finally, monitor how well you're sticking to your spending plan. You'll need to adjust it as you move through your life and your career, because what happens if you don't have children right now and you decide, okay, we're gonna have a baby, or I've been dating my girlfriend for 7 years and now I want to propose, and now it's like, us having to plan for this wedding. Things are going to change throughout your life, and that's okay, that's normal, but prepare for it financially, right? And something else that came up in a webinar was having the discussion of finances with your significant other, right? You want to make sure that your significant other is like-minded in the aspects of what you want financially. What you want financially, what they want financially, so your goals can come together and figure out how y'all can meet them together. That's very important. So I just want to tell you guys, thank you for listening to this video. If you have any questions, again, please don't hesitate to reach out to me. My name is Anita Rehome. You can contact me at erehome@alamo.edu, or you can give me a call at 210-486-2140. Y'all have a fantastic day. We're going to stop sharing. And again, I'm here to assist you guys. So whatever you're needing, please don't hesitate to reach out. Y'all have a great day.